All right, let's get right into it. The Bitcoin market is in a total tug of war right now. We've got two massive conflicting signals pulling it in opposite directions, and we're going to unpack what that means for what's next.
So check this out. One of the most classic buy signals for Bitcoin is flashing right now. But is it a trap? Because at the very same moment, the entire global market is basically frozen, waiting on one single event. Is this the dip to buy or a cliff to fall off of? That's the big question. And in the next few minutes, we are going to break down exactly what's going on.
Okay, so our first signal, it comes from the heart of the network itself. We're talking about the miners. These are the folks who keep the whole thing running, and right now, they're sending out a major warning flare. This signal is called the hash ribbons. And I know it sounds kind of technical, but the idea is actually super simple. Just think of the network's hash rate, all that computing power as its heartbeat. It's what keeps Bitcoin alive and secure. The hash ribbons, well, they're basically the EKG tracking that heartbeat. It's a vital sign for the health of the entire Bitcoin ecosystem. So, how do we read this EKG? It usually plays out in a few steps. First, you have the good times, right? Prices are up, mining is profitable, so miners plug in more machines. The network's heartbeat, the hash rate, gets stronger and goes up. But then, the market turns. Prices might drop or electricity costs go through the roof, and miners really start to feel the pain. That's when we hit step 3, capitulation. It sounds dramatic, but it's really simple. They just start unplugging their machines to stop losing money. And that's the key moment. When enough of them do that, the short-term heartbeat drops below the long-term trend line, and bam, the signal is triggered. And look, this isn't some historical chart pattern we're talking about. This is happening right now. That signal is flashing. The recent price step, plus the fact that it's gotten super difficult to mine, has put a massive squeeze on miners. They are unplugging their rigs as we speak. All right, so miners are in trouble. So what, right? Why should you or I care? Well, here's where it gets really interesting. Because this warning sign can actually be a huge flashing green light for an opportunity.
See, this signal is kind of a two-faced coin. In the short term, it can be pretty bearish. It makes sense, right? Miners are struggling, so they might have to sell off their Bitcoin reserves just to pay the bills. That selling pressure can push the price down even more. But, and this is a big but, if you zoom out and look at the history, these moments of maximum pain for miners have almost always been the absolute best times to buy. And hey, don't just take my word for it. Analysts at CryptoQuant have pointed this out, saying, and I'm quoting here, historically, these periods of mining stress have been profitable for Bitcoin investors, with really only one big exception. It's that classic saying, you know, buy when there's blood in the streets. In this case, it's the miners who are bleeding.
Okay, so that's signal number 1, a big long-term bullish sign. Easy, right? Buy the dip? Well, not so fast, because that's only half the picture. Now we have to zoom way out from the crypto world and look at this giant external force that could basically throw a wrench in the whole thing, the U.S. Federal Reserve. Yeah, the Fed is about to have one of its big meetings, the FOMC meeting. And trust me, this is not just some sleepy, boring economic update. The entire market is hanging on every single word that comes out of Fed Chair Jerome Powell's mouth. It's a total high-stakes poker game. And here's the core problem. The market is basically begging for the Fed to say, hey, we're going to start cutting interest rates soon. Cheaper money would be like rocket fuel for assets like crypto. But the actual economic data is telling a totally different story. The job market's still hot, the economy is chugging along, and inflation just won't go down to where the Fed wants it. So you might be thinking, why does crypto care so much about what some guy in a suit says? It's one word, liquidity. It's all about the flow of money. If Powell sounds like he's ready to open the floodgates with rate cuts, money gets cheaper, and a lot of it tends to flow into riskier things, like crypto. But if he sounds worried and cautious, well, that tap can get turned off, like, instantly. Okay, so let's put it all together. You've got this bullish signal bubbling up from inside the crypto market itself, but it's about to crash right into this huge wall of uncertainty from the global economy. And that tension, it has the entire market just completely on edge. This really breaks it down. On one hand, you have the internal signal, the hash ribbons. It's screaming long-term bullish. Its message is pretty clear, buy the dip. But then you have the external force, the Fed meeting, and that's just a giant question mark. Its message is wait and see. So the market is literally getting told to do two opposite things at the exact same time. And that's the bottom line. It's like we're at an intersection. Crypto's internal data is giving us a green light, saying go, 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 this is a great buying opportunity.
But the wider economy, the Fed, that's a flashing yellow light telling everyone to slow down and be careful. That's the exact dilemma every single investor is looking at right now.
So that leaves us with the million-dollar question, right? When an internal buy signal goes head-to-head with this massive external uncertainty, which one is going to win? What's the market going to listen to? The signal from within or the noise from without?
Honestly, we're all on the edge of our seats waiting to see how this plays out. Hey, if you like these explainers that connect the dots in these crazy markets, do me a favor and hit that subscribe button. That way you won't miss the next story we break down. Thanks so much for tuning in.